Don't buy a single stock until you understand this. A stock is a piece of a business. Don't buy the stock unless you understand the business. You want to buy great businesses at fair prices and hold on to them for as long as they're great. That is investing.
When should you buy a stock? This is a very popular question. Should you buy a stock before they release their earnings because you think it's going to go up? Or should you wait until after they release their earnings because you think it's going to go down? Or maybe you should follow technicals and when the pattern's just right. Or maybe when the stock goes under the line that represents RSI. Nah. Or maybe just wait until Cathie Wood buys the stock. Or better yet, when he buys the stock. Okay, we're on to something. Nah, I'm just playing. In my opinion, these are all gambling decisions. The number one thing you should do before you put your hard-earned money into a stock as an investment is to make sure that you fully understand the business. No, not like this. Yeah, Square is a payment company. And they own Cash App. You going to the moon, bro. Step 1. Google the company's name and hit investor relations. The first link will bring you to the company's investors page. You'll have access to all investor materials. I suggest checking out the latest investor presentation. Also read the 10K and 10Q, which is the annual report and the quarterly report. And you'll also have access to the latest conference calls. I suggest listening to the latest one. All for more tips.
5 things to look at before you invest in a stock. Number 1, read the annual report to know about what the company is doing. Number 2, read the last earnings call to know how the company is growing. Number 3, look at how good their product is. You can do this by simply Googling reviews of their product, or you can test out the product yourself, or you could look at their customer retention rates. There's many different ways to do this. Number 4, value the business. Figure out how much each share is actually worth. Number 5, start a brokerage account and invest. Peace.
We have to deal in things that we're capable of understanding. And then once we're over that filter, we have to have a business with some intrinsic characteristics that give it a durable competitive advantage. And then, of course, we would vastly prefer a management in place with a lot of integrity and talent. And finally, no matter how wonderful it is, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life. That's a very simple set of ideas. And the reason that our ideas have not spread faster is they're too simple. The professional classes can't justify their existence if that's all they have to say.
Okay, so that was really good information there from TikTok and from Charlie Munger. Myself, I'm a long-term investor. I'm not a short-term trader, so I'm looking for certain things before I make an investment. And what I always do is first thing is I just need to make sure I understand the company, right? What do they do? What services do they provide? Is it a simple to understand business for myself? Once I've gotten through that, I go through the financial statements. I read them. I make sure the income statement, balance sheet, and cash flows look good. And after I've done that, then the next step is just to buy it at a good price, right? I want to pay a fair price, but ideally I can buy it below the intrinsic value, somewhere between 20 to 40 to 50% off would be great. But even if you pay a fair value, that's fine. And you just hold on to it for the long term, monitor, make sure they're doing everything they need to do, and they're continuing to grow and grow every year. And then you can hold on to the business. If they change course or do something that you don't agree with, then you can always sell it at that point. So that's pretty much it. Pretty simple and straightforward for me. And if you like this content, just subscribe to the channel and we'll see you on the next video.